So I was scrolling through YouTube the other day, just like I usually do, to keep tabs on what's being said in the trading space, when I came across this video. Its thumbnail said, "Trading is easy." And so I clicked on it and watched it. And to be honest, I get why that kind of content gets clicks. It's bold, it's confident, and for someone who's struggling with trading, it's exactly what they want to hear. But after doing this for years and coaching hundreds, if not thousands of traders, I have to respectfully but firmly disagree. And that's not only because I think trading isn't easy, but because I think the creator is using the wrong word to describe it. Now, I know that this sounds like I'm splitting hairs, but trust me, by the end of this video, you're going to understand why this distinction is literally the reason most traders keep losing money. So let's talk about it. Now, before you think I'm just being a hater, hear me out. Because my position isn't that trading is hard or complicated. My position is actually more nuanced than that. I believe trading is simple, but it is not easy. And those two things are not the same. Not even close. Let me break this down linguistically, because the difference between these two words is literally the reason why 70 to 80% of retail traders lose their hard-earned money trading the Forex markets. Simple means not complex. Few moving parts, straightforward to understand. And trading genuinely is simple. I mean, think about it. What's simpler than buying low and selling high? The core concept of trading is simple enough to explain to a teenager. You don't need a degree in finance to understand how to make money through trading the markets. On the other hand, easy means requiring little effort or skill, something almost anyone can do without much practice or preparation. And this is where the trading is easy crowd gets it dangerously wrong, because easy implies you don't need skill, and that framing has cost countless traders their life savings. Here's the thing about skill. Anyone can get lucky on a trade, literally anyone. A complete beginner could open a chart right now, hit buy or sell with zero analysis and walk away with a profit. Does that take skill? No. The only skill involved is the ability to click a button. But earning an income you can rely on through trading, that is, money you can actually live on or use to pay your bills, requires a level of skill and expertise that the overwhelming majority of traders simply don't have. At least not yet. And pretending otherwise doesn't help them. It hurts them. So yes, trading is simple, but it is not easy. And that distinction matters more than almost anything else I could tell you. Because when you believe trading is easy, you tend to approach it completely differently. You'll probably skip the foundational work that's required to become a consistently profitable trader. You'll rush to trade with real money before you've developed the skills needed to protect it. And you'll assume that because making money looked easy for someone else, it should be easy for you too. But sooner or later, reality is going to catch up with you. Then the losses will start to pile, and that's when the market humbles you. That holy grail trading strategy that looked like a guaranteed winner suddenly stops working. And before long, you're going to start questioning yourself. You'll wonder whether you're smart enough, whether you're disciplined enough, whether you're somehow missing a secret that everyone else seems to know. But most of the time, that isn't even the real problem. The real problem is that you walked into trading with wrong expectations. You expected it to be easy, and when you expect something to be easy, the first sign of difficulty feels like proof that you failed. But when you understand that trading is a skill, just like learning a language, playing an instrument, or becoming good at a sport, you look at challenges differently. You'll expect setbacks, you'll expect mistakes, and you'll expect there to be a learning curve. And because of that, you're much less likely to quit when things don't go your way. Instead, you'll study, you'll practice, you'll gain experience, and you'll build the skills that profitable traders have spent years developing. And eventually, you give yourself the opportunity to become one of them. That's the mindset shift I want to leave you with today. Trading isn't easy, but it is learnable. And once you truly understand that distinction, everything changes. Now, I don't want to just sit here and tell you that trading isn't easy and leave it at that. That wouldn't be very helpful. Instead, I want to show you what becoming a consistently profitable trader actually looks like in practice. You see, over the years, both through my own trading journey and through coaching other traders, I've noticed that the people who eventually become profitable traders tend to follow a very similar path. Not necessarily the exact same strategy, but the same process. And that's because profitable trading isn't about the result of a lucky trade, a secret indicator, or some magical trading strategy that no one else knows about. It's the result of developing a rock-solid trading edge and then proving to yourself that that trading edge actually works. For me, That process can be broken down into 6 simple stages. And as I walk you through them, I want you to pay attention to something. Notice how simple each step is to understand, and then notice how much patience and effort it takes to actually do it properly. Because that's the difference between simple and easy. Here's a quick question for you. How serious are you about leveling up your trading game and becoming one of those consistently profitable Forex traders who are able to squeeze profits out of the Forex markets like a broken ATM machine? Well, if you're ready to stop spinning your wheels, guessing your way through trades, and finally cracking the code to earning consistent profits through Forex trading, then I've got something you're absolutely going to love. And guess what? It's absolutely free. I've spent months putting together a profitable Forex trading crash course, which is designed to help you go from being a struggling trader to becoming a consistently profitable Forex trader in a step-by-step manner. By the end of the course, you'll know exactly what you'll need to start and stop doing in order to join the ranks of the lucky few consistently profitable Forex traders who are able to squeeze profits out of the spot Forex market like a broken ATM machine. So what are you waiting for? Head on over to www.fxmindtricksacademy.com/blueprint to get free instant access to the crash course. It's time to start trading smarter, not harder, and finally achieve the results you've been working so hard for. Don't let this rare opportunity pass you by. Take action today and watch your trading game transform for the better. See you on the other side. Let's start with step 0, uncovering your edge. This is where everything begins. Your trading edge is your reason for being in the market in the first place. It's the unique set of rules that gives you a statistical advantage over the markets across a large sample of trades. Without an edge, you're not really trading, you're gambling. Now, there are actually 2 ways to go about this. You can either develop your own unique trading edge from scratch, or you can borrow one that's been proven to work from a trusted source and make it your own. Both approaches can work, but regardless of which path you choose, there's one thing you can't afford to skip, and that is taking the time to understand exactly how and why the edge works. Not just what the rules are, but why those rules exist in the first place. When it tends to perform well and when it struggles, and perhaps, most importantly, when you should stay out of the markets altogether. Simple concept, absolutely. Quick and easy to master? Not even close. The next step of the process is to validate your edge. Once you've found an edge you resonate with, the next step is to find out whether it actually works. And the best way to do that is through backtesting. This is where you take that edge and apply it to historical price data to see how you would have performed in the past over a large sample of trades. More specifically, you'll be testing it on what is known as in-sample data. In other words, historical market data that you'll use to develop, refine, and validate your edge. You're looking for evidence that your chosen trading strategy and risk management plan has an edge in the markets. What was its win rate? What was its average risk-to-reward ratio? What was the largest drawdown it encountered during the testing period? Could you realistically survive the worst losing streak the strategy produced in the past? Now, on paper, this sounds straightforward, but in reality, it can take days or even weeks to manually do this properly. And perhaps more importantly, it requires brutal honesty, because sometimes the data will tell you that your favorite setup isn't nearly as good as you thought it was. Accepting that and moving on is much easier said than done. Step 2 of the process is to stress test your edge. Backtesting shows you how a strategy would have performed on historical data, which was used to test it during the validation phase. But the problem is, a strategy can sometimes perform extremely well on one set of historical data simply because it was unintentionally tailored to those specific market conditions. And that's where forward testing comes in. Instead of testing the strategy on the same historical data, which was used during backtesting, we're now going to test it on a completely different set of historical data known as out-of-sample data. This is historical market data that the strategy hasn't been validated on before. The goal of this is simple: to find out whether the edge still holds up when exposed to market conditions it hasn't already seen. If the trading strategy continues to perform well on out-of-sample data, that's a strong indication that we're dealing with a genuine edge rather than a curve-fitted trading strategy. But if it doesn't, that's valuable information too, because it's much better to discover a weakness during the testing phase than after you've started risking real money to trade with it. This is also where you'll begin to experience something that backtesting can't fully prepare you for: uncertainty. Even though you're still working with historical charts, you don't know what happens next because you're moving through the data candle by candle as if it were unfolding live. You have to trust the process, you have to follow the rules, and you have to resist the temptation to cut corners. Step 3 is to deploy your edge. Once a strategy has proven itself on both in-sample and out-of-sample data, the next step is to expose it to real market conditions using a small live account. This is where you make the transition from testing your edge with historical price data to live trading. But you don't start big. You start small, very small, because the objective of this phase isn't to make money. It's to prove to yourself that you can execute your strategy correctly when real money is on the line. And trust me, that changes everything. Fear starts to show up, hesitation starts to show up, and the temptation to move your stop loss, close trades early, or revenge trade after a loss suddenly becomes very real. This stage is all about proving to yourself that you can remain disciplined even when emotions are involved, and that takes practice, which is definitely not easy. Step 4 is to go big or go home. Once you've been able to demonstrate consistent profitability on a small live account, it's time to scale. You can either grow your own capital or use prop firms to access larger amounts of funding. This is the stage where trading can genuinely become a meaningful source of income. It's also the stage that most traders want to jump to immediately. But here's the thing. You only get here after putting in the work required in all of the previous stages. There are no shortcuts. Step 5 is to automate your edge. Now, I know this step isn't mandatory, but for many traders, it's the natural next stage of evolution. Once you've proven that your trading strategy works and you've demonstrated that you can execute it consistently, you may decide to automate some or even all of the process. That could mean using trading assistants, algorithms, expert advisors, or fully automated trading systems to help you execute your edge more efficiently. But here's the catch. Automation doesn't fix a broken trading strategy. It simply allows you to execute a proven strategy more consistently. In other words, automation comes after mastery and not before it. And that's a mistake a lot of traders make. They try to automate an edge they haven't even proven yet. 5 simple concepts, 6 stages, and every single one of them requires time, effort, and skill to execute properly. And that's why I say trading is simple, but it is not easy. The person who said this isn't entirely wrong, but they're using the wrong word. And in this business, words matter, because the wrong word creates the wrong expectation, and the wrong expectation leads to people risking money they can't afford to lose based on a level of preparation they haven't even reached. Trading is simple. The concepts are learnable, and the process is clear. It's not some mysterious black box that only geniuses can crack. But trading is not easy. It requires skill. Real, developed, hard-earned skill. The kind that only comes from putting in the work, going through the 5 steps, doing the backtesting, surviving the emotional roller coaster of going live for the first time, and coming out of the other side with a process you can trust. The good news in all of this? Simple means learnable. And if you follow the right process and you're willing to do the work, you can absolutely get there. That's what I've seen from the traders I've coached. That's what I know from my own experience, and that's what I want for you. So where are you in the process right now? Are you still trying to find your edge? Are you stuck in backtesting? Have you gone live and felt the wheels come off emotionally? Drop a comment below and tell me exactly where you are. I read all of them, and your answer will help me to figure out what to cover next. If this video gave you a different way of thinking about trading, hit subscribe, because I'm going to be breaking down each of these 5 steps in much more detail in upcoming videos. Real examples, real walkthroughs, and no fluff. Trading is simple. It's not easy, but it is absolutely worth it when you do it right. I'll see you in the next one. Cheers.